Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down 0.9% there on the S&P. Nasdaq down about 1.5%. Semiconductor 2.6%, down about 1% there. Similar with the Russell 2000. Transport, banks. Energy did get hit today with a 3% negative. Biotech is surprisingly green today, along with the healthcare, right? Utilities also green today. Home builders got hit 2% negative. Retail is also down 3.2%. Emerging market down. Also, Bitcoin got hammered today, 5% negative. Gold, silver, miners held up a little bit today. Dollar green, oil down, treasury bond green, VIX pop. Let's do the S&P 500 ETF. Spider, 65-minute chart here. So this is where we closed yesterday. And you know, every time I see something like this happening, I can already tell, I can already see, I can already feel there are a majority of players trying to play this in the short term, thinking this is gonna be some kind of a gap up next day. On Monday, you know, on Friday, you see that this thing breaking above it. So people rush in, YOLOing with some kind of a, you know, short-term trades, and the next day this thing comes right back down. They're pretty pissed today. And market does this over and over and over and over again, right? This is why I always preach about, you know, let's not get too intimate with these short-term fluctuations. All it's gonna do is make your life miserable. But quickly, that's the first hour. There we gap down slightly, come down, coming right back in here. And on the second, third, fourth, fifth, sixth hour, you can see we're just been hanging around. That's a reason. That's a prior resistance been acting as new support here. So we came right to that level, retesting that 466.27. My short-term moving average in that vicinity. My short-term moving average does have some resume here, decent resume, I might add. You can see that's a resistance. Let's start from here. Support, 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 resistance, 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 support here. So we're retesting this. This is the first time we are retesting this short-term moving average as a possible new support since this breakdown right here in reversal, right? So this is a level to watch, and keep in mind this is a level coinciding with the prior resistance, prior swing high. So that's also that, you know, pivot there, right? Horizontal pivot slash support coinciding with that short-term moving average. We're sitting right here, 466.61. Should there be any kind of decline or slide going into tomorrow? If we do lose the short-term moving average going into tomorrow, bulls, you know, bears are gonna try to, you know, retest this gap here. And bears, what the bears gonna try to do? They're gonna try to fill this up gap. This is a big up gap. A lot of that selling or buying pressure came about from that vicinity. A lot of people probably chased it up here, you know, going long on that day. So what the market is going to try to do is kind of sweat them a little bit and putting some pressure. It's a little bit of anxiety. Potentially this thing might come down, at least for the first, you know, at the first stage, we'll be retesting that gap area at 464.41. Obviously, if you're a buyer here, you want higher prices, you want to make sure this level gets further. That's a sort of prior swing high also, the prior P coinciding with the potential new support and the gap area. So next important level will be 461, 464. But let's say like bears are furious, right? Bears are furious, or they're really angry. They're bringing it down pretty hard like next couple of days or maybe even tomorrow. You can see my midterm moving average residing currently at 462.24. So bull's objective is when bears come down, right? When bears come down, trying to put pressure on you, if you're a bull here, what you need to do, what the buyers need to do, make sure at least half of this gap remains open to keep that pressure going. So either this thing does this, does that, you know, maybe even here, because we're over an uptrend. So there's, I think, higher probability we're coming down to kind of cultivate that higher lows. Keep in mind, the uptrend cannot be established without a proper higher low. What I mean by higher low is, do we have any kind of higher low after this kind of move. I mean, we have the sideways move. If this thing gets up, you make new all-time highs. We can consider that as, we can label that as high and low. But as of today, we don't know how this market is going to cultivate and establish the high and low. Is it going to be this? Is it going to be that? Is it going to be this? Is it going to be that? I don't know. You don't know. None of us do. So right approach is trying to figure out what are the key levels, and then we're going to have to react to it going into this week. So this week, I think it's going to be price discovery for the market. Market is going to try to figure out how we're going to kind of cultivate that higher low. Let's check out that oscillator and see if we can extract any more information. So that oscillator looking kind of ugly here, because it looked like with a nice swift cross to the upside and then just whipsawed right back down. And with that, you know, the oscillators as of today, as of now, things can shift tomorrow, but as of today, as of now, as of, you know, with the data that is at hand, it is favoring the bears. But oscillators are probably kind of telling us and warning us that, hey, tomorrow, don't be surprised if bears come down, bring it down and go to about 463s or so, 464s, and, you know, trying to push it all the way down. Here's what I want to tell you real quick, though. I'm going to zoom out. I'm going to give you a little bit of comparison here real quick before I let you guys go with this. So we have a very, very similar price action. We talked about this bullish divergence. You guys remember this? This is how we were able to see that this potentially could be the bottom. Remember that? Right there, right? Bullish divergence, right? I'm gonna circle it just in case you're not getting it, right? Circle. Follow the circle, follow the circle. All right, now you're getting it, right? Lower lows on the price action, higher lows in the oscillator. If you're still asking, what does that mean? I don't have time to explain right now, maybe next time, but you kind of see the diagram there. You kind of see what I'm getting at, right? With that, what happened was we saw a nice gap up. We saw a nice gap up there. And then what happened was this thing started like deteriorate. And then this thing could potentially deteriorate. But we have to understand, you can go back and check my work. Oh, there is higher lows here. And then that became the provide. And then we saw another gap up. And that was that jump start point. And we saw about a month and a half or so bullish run. So kind of keep that in mind. That could be the worst case scenario where things fizzles down and then go back up. But it could do all sorts of things. So the best way for us to kind of navigate this market correctly is to continue to focus on the long-term outlook. And then tomorrow we'll come back and market will tell us what it wants to do. I'm gonna come back for you. We'll reassess the situation, right? Enjoy your evening and go up trading tomorrow.